Hey, everybody. Today I'm here with the great news that it is actually possible to make money in real estate wherever you are. It doesn't have to be Texas or Florida or one of the places that you're always hearing about everybody and their brother investing that herd, the cows following the herd. It is possible to invest and make lots of money wherever you are. And today's guest has done exactly that. I'm happy to welcome Michael Gilman to the show. And Michael is going to talk about his history of investing in the Northeast and how well he's done with that. So Michael, welcome to the show.
Yeah, Jonathan, thank you so much for having me on.
So you have gotten started in your investment career in all places you mentioned in Vermont. And I really want to hear, now this is not typical at all. Usually podcasters are investing in like 2 MSAs around the country. They're all piling into the same spot, competing with each other, driving up the prices of deals, making it impossible for anybody to make money. And you took a different tack, which I really like. You invested in Vermont. So tell me how that came to be.
Yeah, for sure. So, one of the things, when I decided to start investing in real estate, I was really focused on, I really wanted cash flow. I wanted that safety. And, my mindset at the time, I started my career on Wall Street in like 2009, 2010, when everything had just evaporated. And growing up, my parents had lost a lot in the dot-com bubble. And so I had always this feeling that, the equity securities markets were just prone to collapse and evaporate, and kind of looking around, what's kind of the safest investment that could just be there for you, generationally, and a nice piece of cash flowing real estate. And so I was based in New York City, kind of, looked around my backyard, the tri-state area, and it just looked rather unappealing from a cap rates perspective. Cap rates were pretty low, certainly 4% less at that time in New York City. Similar, I think that was a similar story, more or less, plus minus 200 basis points, around the tri-state area. And it just didn't make sense to me because the growth story wasn't there. Like, if I was going to get those kind of cap rates, there were a lot more appealing markets, certainly Southeast, places out West. So I kind of kept looking further from where I was, and that took me to really tertiary markets, in particular New England. Started monitoring those markets. Vermont was one of them, and just a asset popped up on my radar. I had this like daily search going on the MLS, which actually New England is free and still remains free, so anyone can access it. And it was just like this 20 unit, and it was penciling great. And it was almost like shocking how well it was penciling. It was listed an 8 cap, and it was a true 8 cap, and it was just like a nice brick building, a nice asset. And so I drove up there, and I was really hesitant to invest in Vermont. Like, you look at the statistics. You had at that time declining population growth, declining employment growth, unfavorable political climate, by and large, although it's very localized, town based. This particular asset was in the town in Chester, and that was a fairly more pro business town. But and so I was really nervous, but it was 100% occupied, and kind of did my diligence, and everything seemed to check the boxes other than conventional wisdom. Don't invest in these tiny markets. Don't invest somewhere where there's no population growth. And anyway, I went ahead and made the leap. I actually did some creative financing there. Was able to leverage it north of 95%. When again, my cost of capital at that time was like 4%, and so you get 8% cap rate. That's a nice carry there. And so it was we kind of just dove in. It got someone local to be the boots on the ground and manage it, and it just performed really well. What I was really struck by was actually how easy it was to lease, because one of the things people weren't, or I didn't particularly study was inventory, and that can be an even greater driving factor than, say, population loss. If there's no housing stock, and the housing stock that there is 200 years old, can't really build anything new, it's really valuable. And so I was taken aback by how easy it was to rent. And even more so when we started expanding in larger markets out in Colorado, where it was, just much tougher to rent. So that was, a really pleasant surprise, and kind of just doubled down and started buying more assets. And then, eventually when COVID hit, this was 10 years. I think it took 10 years for me to, almost 10 years for me to, finally do real estate full time and say, hey, this is a really sound strategy. Like it's time to double down and, do it full time.
So your sound strategy is what? Is looking for assets in these like undersupplied smaller markets? Is that, I'm just inferring from what you just said, but what is the
Well,
strategy?
broadly, value add real estate, or for one, cash flowing real estate is, right now we have like, I started with the cash flowing strategy, but then branched out to, more kind of opportunistic and value add situations. But just focusing on New England, that specific strategy of just there was no, cap rates were so high because there was no investors, right? There was no competition. And it was, to me, your delta, it was so undervalued that it seemed like there was really a nice niche there. One of the issues in that market, and which we had to solve, was the property management and construction side. There was just no kind of qualified managers. The ones we found were just, very expensive, very inefficient. So we had to build that up, and it was tough because it's, that's a business where you really need scale for it to make sense. That was certainly a challenge, which we were only able to solve by actually expanding markets, and leveraging off kind of, the infrastructure we got from larger markets out west when we finally did expand.
So what proportion of your portfolio now is still in New England, and what part of it is out west in Colorado?
Yeah, we have now about 400 units in New England, and about 700 in Colorado, which most of them we got in the last 2 years. Actually, all of them on the Colorado side.
On the New England side of things, so where did you continue to invest in Vermont, or did you go into bigger markets in New England? How did things evolve from that after that first deal?
Yeah, I was primarily looking to at least stay kind of, I didn't want to have scattered assets all over the place. So stayed in Vermont for a bit, eventually went over to New Hampshire, bought an asset, quickly sold it. Just the timing was right, and we repositioned it quickly. Looking for more, certainly more assets in the region. Maine is on our radar, but again, we need to find something sizable because it's a new market. And the problem I've had recently with New England, it's the prices have really run up. Certainly New Hampshire, deals I was looking at 2 years ago at kind of 60,000 a unit are now trading 110,000 a unit. Vermont has not seen that same price acceleration, though it's has had that same kind of rising tide of people kind of seeking that quality of life.
Yeah, I mean, I think what happened is a lot of markets, people all went to the same place, where they all went to Texas and Florida and the Carolinas and stuff. And when they started getting priced out of those markets, some people decided to look elsewhere, which is one of the things that I started to do. And, I always advise other people to do is look other places. Don't look where everybody else is looking. Try to do something different if you want to make money in this market. I guess enough people did that the prices did start to rise in those markets too. Eventually water kind of finds its level, right? But it's interesting that you mentioned the ease of renting, sort of renting out your apartments, right, in those markets. I've talked with folks who invest, say, in the Hudson River Valley or small towns in upstate New York, and they've reported the same thing, that they can't they can't list them fast enough, right? You have a unit that turns, you fix it up, you have a waiting list for the asset, People are, calling you up unsolicited, asking you if you're renting. I've looked at some markets like and found, town of 50,000 people with like 3 apartments to rent on apartments.com. And I think this is something that people overlook about some of these smaller markets, is just how tight the supply really is, because you don't have all the builders going there to build, right? They're going to the places with this spectacular population growth, and they're neglecting these smaller markets. So, as assets are becoming obsolete and aging out and becoming uninhabitable, the supply of housing is just shrinking, right? And even if the population isn't growing very fast, you've got a supply and demand imbalance that you can exploit as an owner of real estate.
Yeah, 100%. And to that point, not only do you have aged inventory, but the population of owners that actually renovate the asset and upkeep it to, certainly, we repaint it. If the appliance isn't broken, we'll leave it unless it's kind of an eyesore. But it's surprising how many people don't even do basic unit turns, in these rural markets. And so that takes even more of, housing stock offline.
And I mean, so do you find that if you are doing, basic turns, I mean, you're able to get a premium on these apartments just because they're in better shape than everything else that you're comparing it to?
Yeah, absolutely. It's the premium is pretty significant. There's some towns where most towns where we have the highest rents, kind of our apartments. There's sort of no class A to speak of, no new construction, but just by virtue of having a remodeled unit. And again, we're not talking about quartz countertops or anything. Just basic stuff to have a unit look good. It's in sort of let's say the top 5% of housing stock.
So
top 10.
Do you feel like so you mentioned that sort of Maine is on your radar, so you clearly haven't like tapped out of New England, but you are also investing in Colorado. So what's behind that? Why, 2 places that are so far apart from each other?
Yeah, great question. So say when COVID hit, and I decided to double down on real estate and expand. One of the issues was our ability to expand in New England was limited. First of all, just there's labor bottlenecks. It's tough to get deals, tough to get any assets, certainly nothing at size. And so to get to like a scalable size where you could have a business that made sense, it didn't seem like we'd get there in any kind of reasonable time fashion by staying in one market or that market. And one market that I spent a lot of time in is Colorado. I'm a big skier, just love the outdoors, and that was a market that always attracted me. And so we started looking for value add deals right around when COVID hit, hoping we'd see some distress, some dislocation. And certainly it was surprising, and as we all know now, that none of that ever materialized. But we were able to get a few assets to kind of get us a beachhead in there and expand. And it ended up being a blessing for New England, because what's happened since then is I met a larger property management construction company out there, 3Gen, who the principal there, Phil, we ended up becoming partners. We're now pretty much 50-50. I sold my regional property management and construction company to him. He now runs the whole operation, and now we're able to solve a lot of labor log jams and issues that I was not able to. So he's been importing crew from Colorado. We have the housing, and that's been a traditional bottleneck. So we've got that solved. And so now we're really actually have put in place an infrastructure to really start scaling in the region. And I don't think that wouldn't have happened had I not branched into a larger market.
So you're actually, when you need labor, you're actually bringing it in from Colorado to work on your projects in New England.
Yeah, at this point, we just don't have enough local labor. Yeah.
So, and again, is that because of the markets that you're in are very small? You're not or maybe, I don't know, I shouldn't say obviously, I assume you're not talking about like Boston, Cambridge here, right?
Yeah, no.
Yeah, you're talking about smaller rural markets where you just, the population is low, so the labor is hard to find. Is that basically?
Yeah, 100%. There's just, and there's also been an erosion of that, skill set. People have moved to, the larger markets, Boston, certainly the suburbs. It's much more profitable to work on, homes than it is multifamily. And there's just been less, it's just a skill set. I think, everyone, so people that are moving in there are more, tend to be more white collar that are moving up. You're not having tradesmen move up. They're actually, tend to leave. So that has historically created an imbalance that was just really exacerbated since COVID.
And so when you bring in these crews from out of town, I mean, you've got to house them. Where do you put them?
So they pay market rent at one of our properties. We actually a number of them have actually moved here permanently. They liked it so much, and they actually ended up living on some cabins we developed. These were prefab cabins we had brought in from Pennsylvania. Could certainly talk about our little foray into development there, but that's where they're staying now.
I actually do want to talk about this, but I just wanted to mention, I mean, we so it's funny that you mentioned Vermont, because I'm actually under contract on a hotel in Vermont at the moment.
Oh,
and we're solving the labor problem by basically bringing in our own crews as well. So we have a dedicated hotel renovation crew. They're working on a project of mine in upstate New York at the moment, which is going to finish up sort of right as we close on the second property. So we just literally will move them from one hotel to another, and they just stay there. And the nice thing about hotels is that, you don't expect really to ever be 100% occupied. So you always have extra rooms, except, the height of the high season. And in that case, we'll just chalk it up to, well, we're under renovation anyway, so we won't rent out the rooms that they're living in. But it makes it really easy when you've got a hotel, and you can just move them from room to room as they finish the next one.
Mm-hmm. What part of the state?
It's in Bennington.
Oh wow.
Yeah.
Oh, huh. That's funny. No, we're actually under contract there for a little portfolio.
Oh, no kidding.
Well, we'll be neighbors.
That's
right.
Awesome. You come stay at my hotel when you're working on your portfolio. So
yeah, for sure. No, that's really cool. We could improve the area together.
Absolutely. So well, yeah. So anyway, so you had a foray into development, you said, doing some prefab. So tell me about that. That sounds like an interesting thing as well.
Yeah. So we had a few houses, or a few properties we would Airbnb. It was kind of more like for the ski crowd and the hiking crowd and so on, close to the resort mountains, and ended up buying a land that had at one point it had 9 cottages on it. Like a number of them were decrepit and needed to be torn down, but they still had septic connections. And then the others just needed rehab. So I thought, I kind of looked around, how can I replace these cottages that are there economically? And it took me to my journey and research took me to prefab cabins as being really cost effective, about 450 square feet, look like tiny homes. There seemed to be a concentration of manufacturers in Lancaster, Pennsylvania, or around that area. And they were cheap. You get one for like 60,000, and we had all the connections, not all of them, but the important ones, like septic. That's in Vermont, that's again one of the barriers to building. Can you get a septic permit? I mean, you wouldn't believe how complicated it is. Is there a wetland nearby? Is there this, that? It's a huge pain in the ass. From my perspective, being able to buy, you're always grandfathered in. So if you buy something and there was a structure there, you could replace it and you're kind of grandfathered in. So we always look for that, because that's just going to, to do it otherwise just seems too cost prohibitive. So anyway, so it kind of penciled out, and so we went for it. And at the end of the day, we ended up doing 6 in the area. They're still coming online, but kind of I think that'll be, at least for now, our last foray into that. Just it was just time consuming for putting 6 units online, and so kind of the energy, certainly there were some learning experiences. It just doesn't seem scalable, or at least not the way we're doing it. So it was nice, and it's it'll do well, but just in terms of scaling that out as a business line, I think we're putting a little pencil there, pause button.
So speaking of scalability, when you're buying assets in New England, are you like, how do you kind of construct your portfolio? Are you really sort of concentrated on certain markets, or at least certain sort of distances, so that to make it easier to manage these properties together? Or is just explain your thought process around how you build your portfolio in these markets.
Yeah, and so that's really important. So we've tried to do, first and foremost, we've tried to do everything, automate and make everything remote as much as possible, which essentially just leaves you with, you need someone on the ground, you need maintenance, repair, janitorial, kind of just building services. So essentially, as soon as I had like a core of a few properties, we would just tend to look either for something within like 30-45 minutes at most, where our existing crew and connections could kind of incorporate it, or it had to be large enough that if it was more than that, that it would just have to be large enough that it could support a we'd have to hire someone and figure it out, but it would support that like effort. And so that's kind of how we went about growing the business. And so one of the reasons we haven't been able to enter New Hampshire yet is we just haven't found just a sizable opportunity. I did enter it for one point, but we sold that building, and then since then just haven't been able to find something of size where it would justify building out that management and construction infrastructure.
And can you tell me a bit about the kinds of assets that you bought there? I mean, you mentioned before we started that the first building you bought was in Vermont, and it was a 20 unit. Is that typical of the stuff that you're buying there? Are you buying bigger, smaller? What's
yeah. So what was interesting, that 20 unit was actually an exception. Certainly one of the larger buildings in the area. I'd say the typical buildings like or multifamily is a 3-plex or 4-plex. So we've just started, looking at pretty much anything that's a duplex and up, and certainly trying to find people, holders of multiple properties, to be able to get a few at once. Very laborious. You need, usually use a separate closing, separate settlement statement, but at a 8-10% cap rate with value add and heavy value add, because you have mom and pop owners that haven't raised rents for decades. And then there's operational inefficiencies like old boiler systems and things you could do with insulation. So just all these have just heavy value add, and they're already pretty cash flowing. So it's able to pencil at those smaller unit sizes. It's just tough to deploy kind of any amount of capital efficiently. That's so that's another reason we end up going to larger markets. Just there's again, you're just very limited by the size of the deal you can do.
I mean, given that this is New England, are you able to take advantage of things like green tax credits if you're going in, putting in insulation and things like that, or is that not part of the strategy?
Yeah, no, so great question. So talking about Vermont in particular, they have state programs like Energy Efficiency Vermont, it's called, and they will have programs where they will credit and subsidize kind of efficiency improvements. So like heating systems, weatherization, energy. The solar we haven't quite gotten to pencil out. but we've certainly been partnering with them on, weatherization stuff. We have a large project going now where, so let's say the aggregate renovation spend is, let's just say it's like, just to make it easy, 100,000 on a building. What I found that the credits and subsidies they'll contribute like about 30 to 40% of that. So that's not bad. Certainly I'm aware of other programs where you'll get about, up to $30,000 per unit to renovate it, but you are bound to have rents at, according to, I think, the HUD fair market
Right, to
rent guidelines.
keep it affordable, right? It's a trade-off, like we'll subsidize the renovation, but you have to then make it affordable.
Yeah. So there's certainly a lot of programs like that, but there's also, I found a lot of things that are kind of highly touted, like solar and some like these remote technologies that require internet connections or cellular. We just found it tough to pencil out. But traditional stuff like LED lighting, insulation, efficient heating systems, that thermal window, that kind of stuff is penciled out much more.
Yeah, it's funny. I have a friend who actually builds solar homes, right, up in upstate New York. And when we were buying the first hotel that we bought, it's in a very sunny spot. And I'd said to him, "Hey, we're thinking about putting solar here." And he said, "It's probably not worth it to retrofit solar." He said, "You're better off just buying heat pumps," right? He's like, "You'll get so much better bang for your buck with heat pumps in terms of your energy savings than you will with solar, which you're probably not going to make back your investment." I thought that was very interesting, especially since he builds like solar houses, but they're building them from scratch, where like those things are tight as a tick, and they're super efficient, so they can be completely heated by solar, but it just doesn't work for your older retrofit buildings in a lot of cases.
Yeah, for sure. Ground up, I'd say it's definitely different considerations.
So, if you were somebody who was looking to get started in real estate and you live in a small market, or a small market is much more accessible to you than, say, trying to go down south and butt heads with people who know those markets really well. So you've decided that, hey, I'm going to look in some of these markets near me that are smaller. What would you advise somebody in that situation to do? How should they approach getting started in one of these smaller markets?
Yeah, so I'd say first set up like a search, right? Identify what your criteria is, how many units you think you'd be comfortable with, and just set up a search and look at the market and start just underwriting deals, and not, don't put them in like a model, just, back of the napkin, right? What's your typical market expense ratio? In New England, it could be actually pretty high, up to as high as 60% on inefficient buildings where heat is included. Versus, we can get buildings down to like 40%, 45%, but you use some plugins for the market and just do back of the napkin. Like, what's the cap rate? What's my cost of capital? What's my financing rate? Does this make sense? So I'd say that's the first step, is just understanding how the deals pencil out in the market, so that when you see a good deal, you'll be able to jump on it. And I'd say that's number one. And then number two is building out the relationships. Certainly, first and foremost, probably is your boots on the ground. Like, who's going to take care of the property, and not so much deal with tenants, but who's going to deal with emergency calls. Some of that can be outsourced to heating and plumbing. So you don't need. You just need someone on the ground that's going to be able to service the building. One of the things we've done is like remote leasing. We have a central leasing coordinator that leases remotely with digital lock boxes. That's been really successful. But just getting the core people on your team. So I'd say second importance is your lending. Got to get that dialed in, especially in today's market, where it's kind of remarkable that at least the number one issue, I think, now is getting financing for the deal. That certainly was not something that crossed our minds, 2-3, a year ago. And especially, one of since the kind of banking instability, right? You have a lot of lenders, and especially that service these tertiary markets, are pulling back, like these small regional banks. So definitely get that dialed in. Make sure you've got someone on board that's actively lending. They've kind of looked at you as a guarantor. If you can't, or find a guarantor, but just get that ducks in a row so that when the deal comes up, you can jump on it. In terms of getting a real estate agent, that's kind of, I'd say, based on the individual. That's not, I don't think that's always that important. I think we've actually won deals because we didn't have a real estate agent, but anyway, it's another conversation.
And where do you plan to go with this? You're still looking to, if you're still looking in both markets, you're looking to expand in more in one than the other. What's your plan going forward?
Yeah, we're still growing in both markets. We're really looking to scale up here in New England, because right now, cash flows like the order of the day. Investors can put their money in 6% CDs, and why would they want to invest in speculative real estate? So having a strong cash flowing component, at least our investors or people that invest in our deals, having that strong cash flow component is important, and so that's why we're doubling down in the region. And what I found, and we're hoping to bring this to fruition at the end of the summer, is attracting institutional capital. We're looking to do like a roll-up strategy. We're in discussions to sell 300 units to one buyer, where we'd stay on as the manager. It actually recapped the whole deal because we have low-cost debt there from the bank. So that's kind of we're looking to do like the private equity roll-up strategy, I think, in the market.
Awesome. Well, any other thoughts you want to leave the listeners with for small market investing before we wrap up?
It's don't let conventional wisdom hold you back. That I think that even when after I'd invested in the market, it's still prevented me from scaling faster. I was on Wall Street, seeing these big blockbuster deals, and here I am, investing in Vermont, and people are like, what are you doing? and so, just getting over that and taking the jump.
Awesome. Well, listen, Michael, if people want to get in touch with you and learn more about what you do, talk more about investing in small towns, or get on your investor list, what is the best way for them to do that?
Yeah, you can hit me up on LinkedIn, Mike Gilman, or shoot me an email, mike@crossmountaincapital.com. I'd say those are the two best ways.
Awesome. We'll definitely check out Mike at crossmountaincapital.com. And Mike, it's great getting to know you, and thank you for being on the show today.
Yeah, it was a pleasure. Thank you. I really appreciated the conversation.